If you're looking to invest in a semiconductor stock, you will definitely come across these two stocks, Broadcom and Qualcomm. But is this still a good time to buy semiconductor stock? Which one is the better investment right now? Or maybe we are in general too late? I will answer all of these questions today by comparing their main metrics, like for example their revenue growth, their stock price return, their net income margin, their gross profit margin, their return on total capital, financial health, and of course their valuations. Hey there and welcome to the Market Monkeys channel. It's Julia here, and today's video I want to begin from what is different and what is similar for Broadcom and Qualcomm. So first of all, Broadcom and Qualcomm are both giants in the semiconductor industry, but they're operating in two completely different spaces. Broadcom is focused more on infrastructure, networking, and software, while Qualcomm are operating more in mobile processors and 5G chips. Broadcom is heavily focused on strategic acquisitions, and by the way, this is the reason why the name of the company and their ticker, Broadcom and Avgo, have nothing in common, and we have a full breakdown of this company on our channel, so you're invited to go and check it out later. So, as I already said, both of these companies are giants in semiconductor industry, but Broadcom is more focused on acquiring different companies, and they're trying to grow themselves into software direction, while Qualcomm is making innovations more in mobile processors and since lately also in automotive industry. So their comparison, I want to begin straight from the revenues, and revenue growth year over year for Broadcom is much higher than for Qualcomm. As we see, Broadcom has approximately 40% year-over-year growth, while Qualcomm has around 12%. But here we need to pay attention to two major points. First of all, Broadcom recently acquired VMware, and this is the reason why they're able to write the revenues from VMware into their own books. Now, when some company acquires different company, usually it's a bad thing for the company's business, but in case of Broadcom, as we already mentioned, it's their business model. It's the core of their business, and historically speaking, Broadcom's business becomes stronger and stronger with these acquisitions, and probably acquisition of VMware will be no different. Similar to Broadcom, Qualcomm has also expanded to multiple sectors over the years, but they did it unlike Broadcom by themselves without acquiring any other businesses. Qualcomm started from mobile processors, later they added licensing revenue from patents, 5G technology, and more recently it has ventured into automotive and into Internet of Things, which is now, by the way, one of the fastest growing segments of their business. If you find this information valuable, don't forget to support our channel by pressing like button and subscribing. Here I think will be important to mention that Qualcomm stock underperformed Broadcom stocks by a lot. Over the past year, Avgo stock returned about 85%, and over the past 3 years it gained approximately 300%. While Qualcomm returned much less both in the past year and in the past 3 years. Broadcom's stock price return is insane for such a huge company. Just to put things into perspective, let's take a look at their market cap. And here we can see that Broadcom's market cap is about $1 trillion, while Qualcomm's is at about 200 billion. It means that Broadcom is actually 5 times bigger than Qualcomm. So with everything said before, we can definitely agree that Broadcom is a winner in this category, in the category of revenue growth. But right now let's compare the net income margins for Broadcom and Qualcomm over the past 10 years. Net income margin represents how much of company's revenues turns into profits after all of the expenses, including taxes and interest. So, Qualcomm's net income margins are at around 20-25%, meaning that Qualcomm is keeping approximately 20-25 cents for each dollar in revenue, while Broadcom is at about 11% or 11 cents per dollar. In 2023-2024, we see that Broadcom saw a severe drop. This is most likely due to integration costs from the VMware acquisition, and as the time passes and as this acquisition will be finished, as the company will digest this acquisition, we will most likely see a major improvement in this matter, but still, for now, we can definitely say that Qualcomm is a winner in this category. Now let's take a look at the gross profit margins. And high gross profit margins suggest that first of all, company has a good level of cost control, they have pricing power, and that they have efficient and profitable business model. So here we can see that Avgo is standing at approximately 75%, while Qualcomm is at only 55-ish. Higher gross profit margins from Broadcom show that they're retaining more profit from each dollar of the revenue than Qualcomm. And why is it so? First of all, because they have business model differences. Broadcom operates in infrastructure and networking chips, often with longer product life cycles and higher pricing power, and Qualcomm mainly focuses on mobile processors and licensing, which obviously has much more pricing pressure. Broadcom over the years acquired high-margin businesses like VMware, for example, and they're moving in the direction of software, and as we know, software is one of the highest margin businesses. Also, Broadcom's products may have lower production costs relative to pricing, while Qualcomm is heavily relied on third parties like Taiwan Semiconductor and Samsung, which is negatively affecting their pricing and as a result negatively affecting their margins. So after discussing net income margin and gross profit margins, we see that Broadcom is more efficient in production, while Qualcomm is more efficient in overall cost management, but in the metric of gross profit margin, we can definitely say that Broadcom is a leader. Before we jump into valuation, I want to quickly discuss the return on the total capital both for Qualcomm and for Broadcom. Return on the total capital shows how efficiently company generates returns from both debt and equity. Basically, it will show us who is getting bigger return on their investment, Qualcomm or Broadcom, and this is very interesting because of what we discussed before, because Broadcom is heavily investing in different companies and Qualcomm is investing in themselves and growing from within. So surprisingly enough, at least for me, we can see that Qualcomm has a much higher return on total capital than Avgo, meaning it generates better returns from its total capital. But here we should pay attention once again at what happened at the end of 23, beginning 24 for Broadcom, because they had acquired VMware and still did not start to benefit from this acquisition. Meaning that the money has left, but the returns are still on the way. So it will take for the company some time to return to the previous levels. But if you will pay attention to this graph, you will see that even if they will return to this 15 or 18% that they had before, they might still be lower than Qualcomm in this metric. So once again here, I can definitely say that Qualcomm looks better for me. And finally, let's compare their valuations. So price to sales ratio for Broadcom in the trailing 12 months is at about 20, which is insane for the company of this size. It basically means that the company is heavily overvalued. Qualcomm, by the way, is at about 5, meaning that Avgo not only overvalued compared to the market, but also overvalued compared to Qualcomm. By the way, I also went and checked what about their forward PE ratios, and here we can see the same picture. Broadcom is selling at a premium valuation, often about 3 times higher than Qualcomm. Regarding their financial health, we see some very interesting things as well. First of all, Qualcomm has significantly more cash on hand. Avgo stands at about 9.35 billion, while Qualcomm is at about 14 billion. Avgo has much higher debt than Qualcomm. Avgo is almost at $70 billion, while Qualcomm is at 14. And here pay attention, Qualcomm has almost no net debt, while Avgo has higher leverage. So debt to equity for Broadcom is at approximately 100%, while for Qualcomm is almost twice lower. And it basically means that Avgo has more financial risk due to higher debt load. So the financial health verdict is that Qualcomm is in much better financial position than Broadcom, with much more cash and smaller debt. Avgo is heavily leveraged, which increases financial risks, but it also shows that company aggressively financing their growth, and well, this is no surprise, right? They're literally going and buying every company they like. Qualcomm, on the other hand, has much better liquidity, meaning they can stand short-term financial challenges better than Broadcom. Based on everything said before, in my opinion, Qualcomm is much better positioned for growth than Broadcom. They have much lower valuation, they have more cash, and they have almost no debt. Add to all of this the fact that Qualcomm didn't even have the momentum yet like Broadcom, for example, and not only like Broadcom, like most of the semiconductor companies over the past year or over the past 3 years, we can expect, or we can at least say that there is a strong possibility that Qualcomm's momentum will begin in the upcoming months or in the upcoming quarters. And by the way, Wall Street analysts expect Qualcomm to be at $160 per share on the low end, at $200 in average, and at $270 on the high end. It basically means that Wall Street analysts are very bullish on Qualcomm as well. Don't forget to let me know what you think in the comments. Will you buy some of these companies, or maybe you are already a shareholder? What you are planning on doing? Don't forget to support this video by clicking like button and subscribing. It really helps our channel to grow. I will see you on our channel next time. Happy investing!